Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on Bitcoin market. First, we would like to announce that we have prepared new fundamental report. So as usual, you could find it in a blog section here, my blog, and it's dedicated to recent performance of the Bitcoin. We call it as new boost is needed, just because we suggest that the first wave of the cash inflows on the ETFs is coming to an end. We have taken a look at the two major bulk of information. First of all, we tried to estimate the levels that, by opinion of the majority of the traders, analysts, now describe the performance of the Bitcoin. So to estimate the potential target, which is, we're considering only reasonable targets. We're not taking in consideration 1 million, 2 millions. We're only talking about the realistic targets. And we have tried to estimate potential lows, some pain barrier for traders. So what the retracement they could accept in the current rally. So we have tried to estimate the level that will be really painless for holders of the Bitcoin, at what level they could still remain and keep positions, remain in with the market. We have used some analysis on forecasts. Option market, where the major activity of the option traders stand. Second bulk of information is mostly dedicated to some fundamental background longer term, where we're trying to identify big problems that right now are a bit depressed by the euphoria and take the backseat, but very soon they could come on the first stage. And in general, how reliable the Bitcoin market is right now. We are really worried concerning the total control over the market by the United States government. And this could, maybe for speculating purposes, it's not the problem. We could keep these speculative tricks and games and take the part with them. But when we start speaking about the wealth preservation, we're not sure that Bitcoin is the correct decision for this purpose. We explain why and what's really pitfalls and some hidden problems might appear if you are holding your wealth with the Bitcoin market. So hopefully you will like it. Now we're turning back to the market. On a weekly chart, we do not see something really special. You could see that price stands inside of these two previous weeks. It's high wave pattern. Mostly we could describe this long-term context as a bullish because market stands in a tight range near the top. But our situation barely has changed here since our last discussion. The same we could say about the monthly chart. But on the daily, we have a few interesting moments. So first of all, take a look that right on the top, we've got the bearish grabber, and it has been confirmed. This grabber has appeared, as you know, on the significant outflows from the ETFs that has happened for the first time after the big inflows previously. And potentially these grabbers suggest taking out of these lows, so some kind of forming some kind of the double repo sell or double top on lower time frames, some reversal pattern. Yes, maybe this is really risky based on the background of this upward rally, but at the same time you're in the validation point very close, so the top of the grabber stands around 72, and this will be very small risks that you will have to take if you would like to take the short position. Reward will be significant. You will get approximately 10,000 Bitcoin, so this might be significant area. And that is what you need to think about. Maybe this week, maybe on the next week, just to not keep position for the Easter holidays. But this is definitely the point that we need to keep an eye on, because it's interesting. Speaking about our previous trade, if you remember, we have made the second attempt to trade the hand shoulders. This time it has become actually much better. Actually, it worked fine. you can see market has completed the OP target. The minimum target of this head and shoulders around 69.70, so we call it as a 70 even, and even has slightly, you can see, overcome it. Now let's take a look what's going on. Market stands in retracement. If you still hold the bullish positions, you have to keep an eye on these lows, because if market will break the 78 down, it could mean that hand shoulders is over, because recall what we have on the daily. We have the bearish, or at least bearish grabber, or at least we could get the here's deeper ABCD retracement. It's also possible. So that's the actually what we need to keep an eye on. Currently, it's not the fact that market will be able to reach 74.30, next target's 1618 extension that we also have discussed. It might happen that upper direction might be over in the short term with just minimum target of the hand shoulders. In fact, hand shoulders is already completed because it has reached the minimum target. This is just an option, some bonus if we will get it. With the taking closer look on what's going on here on hourly chart, you will see that we mostly have some bearish context. Market is forming bearish guardian steeple to sell after reversal performance. Here, as you can see on the 4-hour time frame chart, you can see this is reversal performance. Market creates the new top and close below the lows of the multiple candles that stands to the left. So this is reversal bar, and that's pattern might be limited just by the minimum pullback, as you know, because it's 30% retracement. It's minimum target, but very often, especially in the gold market, the 222s becoming reversal patterns when they're forming on top after the first downside swing. It very often happens. So if you're not sure what to do with your long position, you could control the situation with this Gartner's 222. If somehow we start dropping lower, accelerating, it will tell you that's probably a bit better to out and find another chance for taking the long position. Besides, today we will get personal consumption expenditures and release. We're coming to the long-term holidays until the Monday, so it's enough factors that stands in favor of just sitting on the hands and postpone any activity on the next week. So that's the few moments to keep an eye on. So currently, I would say that it is not quite clear that the upper direction is over, although we have the early signs that it might be over with the grabber on the daily and with the 222 here on the hourly chart. But since we have these patterns, it makes sense to make some action, either to protect the position or to decrease the value of your position or do something that could limit your risk. So if you would like to take the short position, this is also the points where you have to make the decision, because if market will start moving with the grabber on the daily chart, it probably will happen right from this point. Here's you will get the position with the minimum risk. Chances on success not very high, but with a very small risk, that might be acceptable. So just think, decide.